Welcome back to the channel. My name is Brad, and today we have Cy with us again today. Cy, how are you doing?
Doing great, Brad. It's been too long. It's good to see you again, and it's been a
Yeah.
lot of action since the last time we chatted, so I'm eager to get connected with you.
Awesome. Let's talk about TSPY. You're over 1 year now. I saw 82 million in assets under management. Let's talk about the last year. Lots of things have changed. What do we expect going forward? Not forward guidance, but what have we learned?
Brad, it has been an unbelievable ride. Really enjoyed the process. You know, this is first time fund issuer, first time fund, and to get to our 1 year marker, it's really been such an experience of learning and successes and challenges. And you put all that together, I think the other underlying thing too, not to get too like touchy feely about it, but through this process, the people that we've been able to meet along the way, including yourself, and getting interactions like we do on your channel and even off the channel, has been so rewarding, and it makes us feel like we're in the right place at the right time, doing the right thing. So, been an incredible year, and just learned a ton of lessons, and would love to share some of the things that we've learned over the past year.
So let's go down your. What's the first lesson that you've learned over the last year?
I think one of the biggest things that we learned was this idea of theory versus practice. So, in theory, you look at the market, and there are things that just should never on paper occur that do anyway. And that reality, when you're investing real assets in a real external environment versus the things maybe you back test or you put in a spreadsheet and calculate out, they're very different things. And that sort of lesson is really important to the types of capabilities you put in your fund. So the real world example was everybody remembers April of this year. And we had just historic volatility. And when you're looking at strategies like TSPY has with covered call funds, volatility can help and hurt depending on what sort of tools you have in place. So April happened, there was a big dip on the 2nd and then a huge upswing on the 9th. Those things teach you lessons. And that was one of the things where we were able to harden the strategy, how we execute it, and put some really powerful tools in place where if you look at the fund's performance since April to today, it really shows a difference compared to what the market's been doing and some of the other choices out there based on taking that learning and finding a way to strengthen what you're doing. And that's I think one of the core learnings where we always want to get better from the inputs that we get and get stronger and tighter. And that's one of the things that's really stuck with us since that April experience. Another lesson that that we learned was there's an interesting um, corner of the market where people try to guess what's the market going to do, where's it going to go. We learned that like maybe you have a crystal ball that we don't have or other people don't have, but it's impossible to guess where the market's going to go. So the best you can do is just manage the risk around it. So some of the tools that we ended up building helped give us just really clear indicators on where you see risk patterns changing. And that helps you at least be able to react and manage that risk in a way that helps performance over the long term. And so just, not guessing markets, just managing it, super important when it comes to just market activity in general, but especially when you're managing funds. So that was, I think, a big one. And then I think the third one that really I think hits home was just, you know, people kind of know the story now about TappAlpha and where we came from. We were not finance people before, engineers, technology. We came from tech. But having fresh eyes coming into the finance world, and especially ETFs as funds, was we were worried it was going to be like an Achilles heel or a negative. It's actually turned out to be our biggest superpower. Coming in with fresh eyes to ask questions that other people don't ask really helped us to hone and do things differently than everybody else does. And you can see that with respect to the differentiation and some of the performance we're able to deliver, and just the mechanisms and the scale that we're hoping to have over the long term. Where if we didn't, if we just accepted things as gospel, like you do when you're in an industry for 30 years, we would be, I think, in a much different place. So those were really important learnings for what we sort of figured out since we've been part of the industry.
You just came out with a new fund called TDAC, and that has done fairly well. But I noticed that you have some calls out there today, at least on your spreadsheet you do. How's that going for you? How was the launch? And anything that you can share with the audience on that?
Yeah, it's so excited. So this was a big moment for us too. So TSPY just had a year, and then shortly after that, we're able to launch TDAC, the second fund. The coolest thing, and me being like an engine nerd in some ways, I love being able to solve kind of a problem once and then applying that solution to future stuff. Everything that we learned through running TSPY, we codified in the underlying fintech that we use and the processes that we have. All of that has ported over, and on day one, been able to benefit the new fund, TDAC. So the first call that we wrote literally runs through the exact same process as TSPY does for how it executes the analysis that's done and the button press to now execute the TDAC call. So we put our first one on today, able to look at, we wanted to swing the bat, took a reasonable risk, collect a little bit of premium, but the coolest part is all of the plumbing and all the end-to-end connectivity uses the same infrastructure as TSPY. So, but the underlying security itself, it's going to behave a little differently, but all the tools will still apply. So that, I think, is the most exciting part for me as an engineer. Looking at the tools are going to apply it the same way to future funds as well.
Going forward, do we expect anything new from TappAlpha?
We are, like I said, the most exciting thing I think for us is how energizing it's been to interact with folks like you who are passionate about education for DIY and retail investors, and then also hearing directly from investors as well. So we're not committing to what the roadmap is going to be, but we've heard a lot of really interesting feedback on taking this idea of, hey, we love what you're doing in TSPY and TDAC, but one thing that would be helpful would be maybe a reasonable or a light leverage series of funds that could come along with it. So that's one of the things that we're potentially exploring with some partners to say, hey, if we did it, for me, like our risk profile is kind of low to moderate, but one of our partners, Tuttle Capital Management, they're on a different end of the spectrum for risk in the products that they put out there. But maybe there's a middle ground where we can come together and find something that could actually really help meet a market need to help do-it-yourself investors, retail investors really get a leverage outcome that still supports both ideas of growth plus income, but doing so in a way that it's appropriate for your time horizon, could add a nice little lift to what we're able to deliver with TSPY and TDAC.
Good news. I know that the market and people that follow me are looking for more products. Maybe they're looking for a little more growth. Maybe they're looking for a little more income. And maybe this is something that meets you in the middle.
Love it. And that's, I think, one of my favorite parts is just the interaction. So keep reaching out, keep commenting. Would love to hear kind of people's insights and where they feel there's a need. I love to think about things as kind of problem first. What's the problem that you're solving? Really dig into that. And then as a second step, we can figure out, okay, what's the solution to sort of meet that need? So anything that can be offered to help frame the problem for us is really powerful, because then we can get super creative on maybe the best ways to meet that need versus, speaking of lessons learned, this was early in my career. I learned the field of dreams idea. If you build it, they will come. Yeah, it doesn't exist. Don't do that, because if you build it, they won't come, because you jumped right to a solution before even knowing if there was a problem to
What they
solve in the
needed.
first place. So that's really helpful for us, and we welcome all input from that perspective.
Si, is there anything you want to close with?
I just want to say thank you for all the educational work you do. It's hard. Finance is a very complex topic, and you do such a great job of helping folks get under the hood. So anything we can do to help support you to that end, taking the product stuff out of it, the ETF stuff out of it, but just knowing how important learning about finance is because of the impact that it can make on people's lives. You do a great job of providing balanced information, and we want to be a resource for you too. But been awesome getting to know you, and looking forward to meeting you in person in Chicago.
Well, I know that myself is looking forward to meeting you in person in Chicago coming up in October. And there's going to be some other YouTubers coming out. Marcos is coming out. So that is awesome. I'm friends with most of these guys and maybe one that I haven't met. And I'd be glad to meet him also. So, Sai, thank you for coming on the channel, giving us an update. And we look forward to those first distributions.
Thank you, Brad. Great to see you again and look forward to seeing you in person.